What's up, savage investors? Now, something a little bit different and I want to do more of, which is breaking down these technical, abstract and sometimes boring white papers and putting them in simplistic terms because we fear what we don't understand. And so if we can get our heads around it and we start to understand it, we no longer fear it, we'll then invest and we'll gain confidence in what we invest. So on today's video, we're going to be breaking down Damo's white paper. Projects you probably haven't heard of unless you are an API-free token holder. Why? Because API-free token holders, if you were staking back in August and you set up your Polygon network on your MetaMask wallet, you'll be receiving this airdrop end of year. Now, we're in November 2021, so that's just next month. So you haven't got long to wait. So let's take a look. Enough of me talking. I'm going to go off. No, whoa. We need me talking. I'm going to come off the camera so we can focus on the white paper and really see why, who and how Damo are changing the game for DAOs. So let's take a look. So as we start, I've broken this down following all the little chapters within the white paper, highlighting, in my opinion, the most important parts. Now, of course, you can go deeper and the links will be below for you to do so. I'm a big believer in you hear it once, but sometimes you'll hear it from another source and it suddenly clicks. So, Damo, DAO operated asset management organization. A lot of exciting things tied up in that one tagline, and we're going to unpack it right now. So Damo is a DAO operated asset management organization. DAOs are extremely exciting right now with the rise of Hector DAO and Olympus, but let's see what separates Damo. So more plainly, a DAO, a decentralized autonomous organization that specifically governs the management of assets. In this case, specifically, it is the management of the composition of decentralized investment vehicles. Now, we're going to take a look shortly into what these decentralized investment vehicles are, but for now, keep that in mind. We're going to come back to it. So let's look at the opportunity, problem and solution that Damo are looking to solve. So firstly, we all acknowledge the existing problem in the crypto market, which is crypto investments are subject to extreme volatility. So what that means is there's trillions of dollars, and this is the opportunity, which is yet to enter the markets, whether that be from institutes, retail, but investors in general, who are risk averse. But what Damo are providing is a decentralized investment vehicle that is less risk tolerant, allowing these players to engage with Damo and giving them the potential to claim a piece of this $1 trillion bounty, while at the same time legitimizing crypto assets across the entire ecosystem. So it's giving both the benefit to Damo because of course they can capitalize on that multi-trillion market cap, but also supporting those more risk-averse investors who don't have much risk tolerance but can still participate in this space. Problem, solution, opportunity, all tick boxes for me. So how can you get involved? Well, the governance token is Damo, D-A-M-O, and it's the key to the ecosystem, which we'll be unpacking shortly. The Discord and Telegram links will be below, so be sure to keep up to date in real time what's happening, as there'll be plenty of updates and there'll be more videos from myself regarding those. Secondly, you'll be able to stake your Damo on their protocol, connecting your MetaMask wallet in return for S-Damo. And again, we're going to break down S-Damo, so another little mental note for what is S-Damo and what can we do with it. And then finally, airdrops, as I mentioned, will be coming to API-free participants, because those who are investors in API-free, very similar to XRP and Flare and the Spark drop that we're getting, is we're crypto savvy, meaning that we are more likely to be active participants when the Flare network launches, and we'll engage with Flare Finance. Very similar with high Damo and API free holders. The API free holders are those more crypto savvy who do their research and who are more active participants, evidently because it's coming to those who are staking on the protocol. And so they want those individuals who are going to be active in the ecosystem. And again, we're going to look into that ecosystem in just a moment, instead of just sellers. Now, it's of course unavoidable that you're going to get people to sell, especially when the price is right. But more importantly, they understand that they can mitigate against that by initially airdropping this to those crypto savvy investors. And we can see here a couple of the statistics. So we've got a base initial price of 50 cents roughly. Of course, that's going to fluctuate as we know with crypto. Total circulating supply of 32 million. So nothing, extravagant. And I personally believe that's a really nice sweet spot, especially for what they're developing. Then we've got this vesting period. So 50% unlock at token generated event, 25% released on a monthly basis, and these vesting tokens are then subject to staking rewards. And as I mentioned earlier, more specifically, August the 22nd was when the snapshot was taken. So hopefully, if you do hold API free tokens, you were staking prior to that date. And if you saw my previous video on how to claim this airdrop, I showed you how to set up your Matic network on your MetaMask wallet, ready for the airdrop. So let's move over to the governance. And as I mentioned, make a little mental note of that Damo token. So this is what you'll be rewarded when you stake your Damo, the governance token. So the Damo token is a representation of participation in the Damo protocol. So this won't be able to be sold on secondary markets. Okay, it's solely a native token within the high Damo protocol, which allows us to vote and create proposals. And let's take a look at this. And I really do like this. Again, so many similarities to Flare Finance and what they're building with YFIN, their governance token. And of course, what High Damo are doing. So proposals can be submitted on-chain by users who hold at least 3% of the Damo supply. I think that's very fair. Why? Because the idea is those are the individuals who are more invested, and you'd like to think those who are more invested have the best interest of the entire ecosystem. So for users who do not have enough, which there'll be many, proposals can then be vetted through our governance community forum. So this is really ingenious, because what this will allow is it will allow the smaller fish, if you want to call it that, those individuals who don't have the ability to own a large sum of Damo, to still contribute to the governance through these community forums. So a fantastic idea, and an idea which I'm unaware of that exists today, but please let me know if I'm wrong. And then finally, if an off-chain proposal gains enough traction, so that's through that community forum, it will then be brought on-chain by the Damo operators, and that will then be the formal on-chain proposal, which will then be able to be voted upon with anyone who holds the Damo token. You're being rewarded for your participation in this ecosystem, and as such, you'll have a greater say in terms of the direction, both for those who are whales, quote unquote, and those smaller fishes. You will still have a say in how this protocol operates. So now let's look at staking. And what's the incentive for you to stake your Damo? So when staking, you lock up your Damo and you receive a 1-to-1 ratio for Damo. Remember, that's the participation token allowing you to vote on governance. Has no value beyond that. Okay. So when you unstake your Damo, you'll then receive Damo at a 1-to-1 ratio. The Damo is then burned upon you unstaking. This means the Damo rebases are fortified when opting to unstake, and only the remaining amount of Damo will receive the rebase if any Damo remains. Okay, so again, it's purely a participation token and has no other value outside the ecosystem. So hopefully I've really made that clear, that staking your Damo will provide you the opportunity to govern the ecosystem. Now, let's look at the more rewarding aspects of the ecosystem. And that's decapitalization, more specifically their capitalization method, inspired by Olympus. So it provides the protocol with extra revenue streams to sustain a solid APY, which I'd like to think all of us are looking for. Although it's very attractive to see 500,000 APY, we know that's not sustainable. And so Damo straight out the gates are saying, look, and they haven't alluded, and I don't have insider information either, unfortunately, but what the APY will look like. I would argue that anything over 10% we'd all be happy with. And to know that's a sustainable model is fantastic. But let's look at how they're going to achieve that sustainability. So the method of buying liquidity for a discount in a governance token over a vested period of time is a mechanism first seen in Olympus DAO. And this is something that Damo pride themselves on when it comes to protocol-owned liquidity. So let's take a look at that and how they resemble what Olympus have managed to achieve. So capitalizations will offer different discount rates that will be monitored by the DAO. So protocol-owned liquidity is a very important function within the Damo ecosystem. More POL guarantees the user that there is always locked exit liquidity in trading pools to facilitate market operations and protect token holders from liquidity providers pulling liquidity. To put it quite simply, one of the most difficult things with many of these protocols is having the liquidity, that buying and selling ability, moving your funds, these transactions to and from different pools within these ecosystems. And what it means by the protocol owning this, and we're about to take a deeper look into this, is this very unique structure. So POL occurs when users elect to unlock Damo by selling their LP tokens or DIV tokens to the protocol. And we're going to look into DIVs in just a second. DIV stands for Decentralized Investment Vehicles. Additionally, Damo does not have to pay out farming rewards to incentive liquidity providers. Now, out of this entire white paper, and by the way, as a disclaimer, I run strong masternodes, and I am also not blind to the fact that there is a incentive issue down the line if it remains that node operators contribute back to the reward pool. As we know, that is not sustainable, and so do Strong. And they're looking at a variety of ways to solve that sustainability issue. What Damo are doing here with their DAO, of course completely different to Strong, but again we can see an existing issue. But how Damo are preventing that issue by stating that, hey, look, Damo as a DAO, as a protocol, we don't expect you or us, our treasury, to pay out any of the farming rewards to incentivize liquidity providers. And what's fascinating is this is exactly how they do it. So Damo then becomes the largest liquidity provider in the pool, which will translate to an additional source of income for the treasury as LP fees are accumulated. So that's liquidity pools. The pool can also be used to back the newly minted Damo as well as DIV tokens, giving a fantastic sustainability model to the entire ecosystem. And this final paragraph here really sums up the importance of a protocol-owned liquidity, because it ensures that there will be a party that will always facilitate all transactions within the protocol. More importantly, this party is the protocol itself. This enables users and protocol to not be reliant on traditional liquidity pools, but instead be reliant on the protocol itself to pay people out and facilitate the market. When we talk about a sustainable model, both for the protocol in terms of, the APY and of course the liquidity within the protocol, when we talk about us as the users and being financially rewarding for us from day 1 and day 500 onwards, this is what I'm looking for. And this is something I hope all of you look for when it comes to a DeFi protocol. Beyond DAOs, beyond nodes, when it comes to you investing in a protocol, into an ecosystem. This is what hopefully you can see as ticking a checkbox, because it certainly ticked mine. Ticked. So, moving onwards, and we're getting closer towards the end of this overview. So divs, as I mentioned at the very beginning, keep this in mind. Decentralized investment vehicles. Man, these acronyms always making me trip over my words. There's one suggestion I'll make to any white paper is, well no, the acronym is actually quite useful. It's just learning a new language. And you can see even myself, who I feel quite competent speaking the language, you still trip up over your words and you still have to remind yourself of what these acronyms mean. So please do not fear if you feel this is going over your head. Sometimes it does require you to read it once, twice, ask again, because I'm a big believer that if you ask once, you never have to ask again. And if it means you looking stupid for 2 minutes, but making wealth for a lifetime, hey, I'll choose the initial one. I'll look stupid for a couple of minutes. So please keep that in mind. If you do have any questions, leave them below, okay? And I will be sure to get back to every single comment in a timely fashion. So what is minting a div? Minting is another way that DAO acquires value. Again, we love to see this because if it has one single point, then it has 1 point of vulnerability. So the process of minting occurs when a user, ourselves, deposits an approved ERC20 into a collateralized vault. Now, there hasn't been any information yet on what those tokens are, but as you can see, those that are approved, and I imagine over time more will be added, can be collateralized in this vault. So in exchange for collateralizing your ERC20 token, you will then get your desired div token. Now initially, you and I will be rewarded with Damo for generating a div. Remember, Damo is the governance token of Hi Damo. So this reward in Damo will be temporary. Again, I love this transparency. And of course you can see I'm slightly biased in this protocol, but for good reason. And hopefully I'm showing you why. Because from the gate they're like, look, we're going to reward you in Damo. Hopefully it'll be tremendously financially rewarding, but they also admit, look, this will be temporary. And purely because as a liquidity mining event aimed at distributing tokens to more active users. So again, you're going to be rewarded for participating in this ecosystem. So the vaults are over collateralized to maintain a price floor. And this really spoke to me in terms of what Hedera Hashgraph are doing. And again, I'm bringing all these other reference points, hopefully, to make it really sink in, because Hedera Hashgraph, as more apps are built on Hedera, these apps have to buy up HBAR. Transaction fees require HBAR. So the more dApps that are built on top of Hedera, we then see the price floor rise for HBAR. Now it's quite difficult to calculate what the price floor for Hedera is today, but we can be rest assured there is a price floor. And there's a number of calculations out there online where you can calculate, okay, it's 3 cents, it's 13 cents, etc, etc, etc. And it's almost a predictable model that, okay, once you've got 1 million dApps built on this network, the price floor will be X. And so we can see that similarity when we come back to Hi Damo. You know, that minting these decentralized investment vehicles, very similar to Hedera's sustainable price floor model, based on utility, you'll be able to sleep easier at night, knowing what you hold becomes less volatile. And if we come back again to the beginning of the problem they are trying to solve, it's for less risk tolerant players. They are very clear on who this is aimed and designed for, and they have kept their ideal user and customer front of mind through every single part of the process. They are not rushing it, they're dropping it to the right people. They've got a governance program which will allow those less risk tolerant. Hey, and myself, I like risk, but at times it's also nice to know that, hey, we can put something over here, earn tremendous yield, sleep easier at night, and that we control the protocol to a degree. That we can stake and be rewarded with that participant token. That the protocol owns its own liquidity, and why that is so key and important. And then when we come to the more, like I say, lucrative aspect of things, when it comes to minting these divs, I'm a utility maxi every single day. So how are these divs backed? Because it's really important to understand what's backing the high treasury, and of course what's backing this price floor that we're talking about. So these divs are what allow the user to gain exposure to multiple assets. Flare Finance are already doing this, bringing on F assets. So straight out of the gate, both High Damo are doing something very similar to Flare Finance. Flare Finance from day one is saying, hey, if you hold XLM, Doge, XRP, Litecoin, you can come and bring it on and participate in this DeFi ecosystem. High Damo are doing it exactly the same. They're saying, hey, if you have an approved ERC20 token, you can come and play from day one. Now, what does that mean? To put it quite simply, okay, you can't quite do the maths, but if you take the market caps from Litecoin, Doge, XRP, XLM, you've got 4 of the top 10 market caps coming on to Flare Finance. Now, of course, not the entire market caps, but you know, a percentage of it. And then we look at this as well. High Damo realize that their protocol can't survive solely off Damo alone. And actually, it can benefit tremendously. If you already hold ERC20 tokens, which I'd like to think most of us do, you will receive your desired div token. And with the div token, users can either hodl, provide liquidity, and capitalize on earning more Damo. So capitalizing on more Damo is a key function of the protocol that allows users to exchange the div or div liquidity pool tokens back to the protocol in exchange for more Damo at a discount over a 5-day vesting period. So of course that's a little bit more intricate there on that final note. But the key thing we need to take away right here is that our 2 actors within the div's respected ecosystem. One are the miners, the minters of the div tokens, so you and I. And 2, those who participate in capitalization. Again, we've already gone over capitalization and what's gone on over here and how this is going to provide a sustainable APY inspired by Olympus DAO. So it's this beautiful circular economy. And then finally, we come to the existing integrations, 2 particularly that I want to highlight to you. Number 1 is API free. API free builds a decentrally governed and quantifiable secure data feeds that power Web 3.0 applications without employing third-party intermediaries. Damn it, Jordan, you got so close. Again, I'm going to bring up another Flare Finance beautiful example. This idea that Flare networks, that layer 1 that Flare Finance is being built on top of, and how they have their own native oracle, how they have their own native security auditing process. When you mitigate against third-party intermediaries, you, in a sense, secure the protocol. But not only that, they realize that API free's air nodes, which again is probably a video for another day, protocol will allow for deployment of data feeds for tokens across various blockchain networks. That's the beauty of the Flare time series oracles. It's that data feeds being provided where you can provide data on stocks, gold, other crypto prices. This is what the API-free Airnode protocol will allow. And by utilizing this API-free, hyper-efficient Airnode protocol, which I really do encourage all of you to look more into, the protocol will avoid arguably one of the biggest barriers to entry, high gas fees, which will in turn allow you and I to be more active and optimize the decentralized investment vehicles, those divs. And that's what's truly beautiful about this, right? If we get our heads around this, we're going to be able to mint div by locking up and collateralizing our ERC20 tokens within a vault without the Ethereum gas fees thanks to the API-free Air node. Powerful beyond belief. Powerful, powerful, powerful. And then finally, the last thing that should be on all of our minds is the security of the protocol. And that's why I really should have seen how to pronounce this. Gnosis? Gnosis? I've given you two. You can let me know in the comments which one's correct. They're using the Gnosis Safe, which is the most trusted platform to manage digital assets on Ethereum. And you can see who they are trusted by. Just to put your mind at ease, that Hi Damo, although they will be born in December, that doesn't mean that they're cutting corners. And as you can see, they've truly taken their time to create and to build a DAO, operated asset management organization, that is going to attract a number of communities from day one, and most importantly, it's going to give a reduced barrier to entry for many to participate in a DAO and to move and to operate freely within the ecosystem. Now, most importantly, timelines. At speaking to Hunter, he mentioned that they want to stick away from stating in timelines. However, he has mentioned that various parts of the protocol will be dripped over time. Very similar to Flare Finance. It makes perfect sense, right? It gives you time to iterate. You have to accept there will be bugs, whether it's in the user interface or deeper in the code. And so from day one launching everything, you're almost welcoming problems. So please acknowledge that there are future updates to come, that when it launches from day one, it will not be a finished product, and there will be more services, the ones that we have seen, and also probably those that we haven't seen, partnerships too, that we should be truly excited about. And with that being said, you can hear my dog. That's my time up. I hope you've enjoyed this white paper overview, and more importantly, you'll do your own research, knowing that you don't need to fear diving into these white papers, and that it does take time. But once you understand what you're invested in, you'll gain confidence, and that's where creating these loops, these passive income streams, truly do create generational wealth. And most importantly, you're supporting a fantastic team that are building something on top of what already works. No need to reinvent the wheel, just tweak it and bring different wheels together. So with that being said, savages, I will see you in the next video. Thanks for rocking with me this long. Ciao for now.